Thank you very much for the introduction. My name is Michael Curlook, VP of Investor Relations for MAG Silver. Just want to take a few moments of your time today to tell you about what's going on with MAG. We're going to have to go run through it fairly quickly, so let's move forward. So the reason this is our decline, the reason we show this picture here is for three reasons: quality, commitment, and cost. We are partnered with Fresnillo PLC, which is listed on the London Stock Exchange. It's the world's largest primary silver producer, and they're the operator of our project. As you can see, this is an underground decline. It maybe looks or reminds you more of a Swiss tunnel or something like that. This is our decline. It's over 6,000 meters long at this point, and you don't build something of this quality with a 25-centimeter base unless you're committed to the project and a long project. The other thing that this shows, as I mentioned earlier, is the potential cost of something like this. If you were to build this in, let's say, Nevada, in Quebec, in Ontario, without a concrete centimeter base, 25-centimeter base, it would cost you in the neighborhood about $4,000 per meter. Fresnillo is doing it for us for under $2,000 a meter. So not only are they building a quality project, but they're committed to it, and the cost is second to none. So MAG Silver. MAG Silver, we started the company in 2000, and our goal was to find high-grade silver with a high IRR, so a good return on your money, and district scale, which is long-term mine life or long mine life. Of course, when you're looking for silver in Mexico, you find zinc, lead, and gold along with it, and we were happy to do so and have done so. Right now, our main asset is the Juanicipio JV. It is the world's, the Juanicipio JV is the world's primary silver asset today. We have a JV of 44% and Fresnillo has 56%. The asset is significant. It's 145 million ounces of silver at over 550 grams per ton. And that's for indicated. If you continue that further into an inferred resource, we add another 41 million ounces at over 650 grams per ton. Through that runs a 2-gram gold vein from top to bottom of the asset, as well as 4.5% lead and zinc. On an after-tax IRR basis, we have 44% after-tax IRR, and we have a 19-year mine life. And as I mentioned earlier, Fresnillo is our partner and operator. We have a very strong financial position. We have $153 million US in the bank with no debt. From a market point of view, we have 85 million shares out, never diluted or consolidated. That's what we've raised thus far, and we've raised on that thus far $240 million to support our actions. As I mentioned earlier, we have $153 million in cash and no debt. We currently have a $1.2 billion market cap, and we have 8 employees. So we have $150 million market cap per employee. So what has made MAG successful to date? What we've done is we've been very successful at discovery. We're geologists and explorationists, and we have found 5 assets in the last 13 years on this area of this asset in the Fresnillo silver trend. And we've also have 3 other assets up in Chihuahua, but we're not talking about them right now because the value driver of MAG Silver at this point is these assets in the or on the Juanicipio JV. So if you're looking for silver in the world, you go to Mexico. If you're looking for silver in Mexico, you go to the Fresnillo silver trend. It houses over 10% of the world's historical silver, which attributes to about 6.2 billion ounces of silver. You can see here is the Fresnillo tenement, and over here is the JV tenement right there. So let's zoom into that. This here whole area is about 6 kilometers in length. This is the upper right-hand corner of the JV, which goes down a total of 16 kilometers this way and 7 out that way. This here has been for the longest time the world's primary silver producing mine. As you can see in 2011, produced 30 million ounces of silver per annum. In 2017, it produced 16.5. Why is that? Because these vein structures are high silver at the top, and as you mine down, the silver wanes and the base metals start coming in. So after a number of years of mining these top areas or the top structures of the veins, you then, as I mentioned, the silver starts waning. What you then do is you go to the next mine, and here now is the world's leading silver mine, which is the Saucedo mine. It actually produces over 8,000 tons a day, 2 4,000 ton a day mills. As you can see, it's actually on the same vein structure that we're on. Our vein here is the Valdecañas vein. When we got the property back in 2003, our first drill hole, hole 001, struck the Juanicipio vein. 16 holes later, we hit the Valdecañas vein, which attributes 90% of the value of our company today. One of the nice things is, from a mining point of view and reducing risk, is Fresnillo's been mining this same vein for pretty much the last 5 years. So from an extraction point of view, it reduces the risk for an investor. Similarly, they have 2 mills, 2 4,000 ton a day mills operating over here. So that also reduces your risk on recovery, because you know exactly the recoveries. They've had the time to optimize these mills to the highest degree of recovery. Now, when we struck our first hole here in 2003, Fresnillo had this property prior to us and had given it up. We got the property back. We hit the Juanicipio vein. Fresnillo came back here and found another additional 650 million ounces. So where are we? This is a long section. Here, this is what's going to be going into production through the PEA that we had put out in November 2017. This is what we call the Bonanza Zone, and just a little bit of this. But in 2015, April of 2015, we wanted to close this off. We wanted to sterilize the rest of anything that was below the structure, because usually these veins just end. You have the structure above here, you mine it, all this area, and it ends. So we just stuck 4 holes down here, P1, 2, 3, and 4. Now, to understand what I'm going to say is, the length of this, as you can see, is 1,200 meters. It's 450 meters high, and it's about 6 meters wide. What we found here in holes P1, 2, and 3, and 4, the mineralization went on true thickness out from 6 meters to 11 meters to 22 to 26 to 32 meters wide. So we were very surprised with that, and we continued to drill. And we drilled and we drilled, and every time we drilled, we found more and more. So we've been very fortunate to be very successful. As you can see here, this is what we have at 8 million tons at 550, and as I mentioned, 2-gram gold, and then the percentage of lead and zinc. As you can see, when you go below the Bonanza Zone, your silver goes down, as you would expect it to, but then you see the lead and zinc come up. And of course, we have the tonnage is very significant too. We have 15 million tons in the deep zone. So this is comparing just very, very quickly the two zones. The Bonanza Zone, as mentioned, it has 550 grams silver, 4.5 lead zinc, 1.5 grams gold on average going throughout. And of course, you've got indicated and the 1,200 meter strength length, and it continues to open basically on the northwest of the project. And the deep zone just continues to open up more as we drill deeper and as we drill east and west on the project as well. So we did as I was saying, the PEA. This is one we had done in 2012, and we had it done in 2017. The reason I put this up is not for you to get mixed up on the numbers, but our after-tax IRR kind of maintained the same over that 5-year period. But what you can see is the effective tax rate increased substantially. In addition, the silver price decreased substantially, but yet we still have a very, very good IRR, or what we had initially, with all those variables changing on a negative basis. The other thing we have is, as you can see, is a $5 per ounce of silver all-in sustaining cost. What that means is, even at $8 silver, which of course we never want to see that, at $8 silver, we have an after-tax IRR of 15%. So when the rest of this industry is being severely challenged, if not worse, we're still providing you as an investor an after-tax IRR of 15%. The project has increased since 2012. It's gone from 2,650 tons a day up to 4,000 tons a day. And the metrics, like on-site operating costs, continue to go down as well. So this is a very conservative PEA, and it just shows the robustness of the project and of the asset. As a matter of fact, that Saucito mine that I mentioned that Fresnillo is currently running, the world's largest mine, their on-site operating costs are actually in the low 40s. So it just goes to show you how conservative this PEA is. So this is where we are on the development. We've done the initial decline. We're working on a second decline because the project increased, so we needed to twin the decline. The ventilation and development is very much being developed today. And we're starting to actually purchase some of the large componentry for the mill. We're just starting to do that, and we'll be in production in H1 2020. So this is the decline that I just talked about. The blue is what has been done over the last 2.5 to 3 years. That's the first decline. As you can see, in a year's time, we've done, which is in white, the latest year, we've done as much as we've done in the last 3 years. So we're really going at it, and the project is definitely being geared toward H1 2020. The recoveries, as I mentioned, are very, very important and very good. They're all in the 90 percentiles except the gold. And we're actually thinking of putting on a gravity circuit at the beginning, so to raise that percentage of the gold recovery as well. From the surface plant situation, we have surface infrastructure. This is a place where they've been mining silver for 130 years. So it's very much a place where you have all the infrastructure that you need to mine. On-site operating costs, we've already gone through that, so we'll skip through that. And these are just some metrics that I'm not going to bore you with because we don't have enough time. The most important things here are the pre-tax IRR and the after-tax IRR, and we just compare the 2012 and 2017 PEAs. So if you use the same numbers as the 2012 PEA, you can see that the project has just gotten more robust based on that same commodity pricing. This is a repeat or a summary of the different features of the PEA, which we don't have enough time to go through. One of the things about this project is the fact of how much it's been de-risked for investors. These are all very high-level topics and perspectives of risk that you have to manage in a mining company. And we have believe we've address them very, very effectively. But one of the most important things is the significant upside of this exploration. So that, in a nutshell, is what we have going forward. That's what's going into production. That's what we have the $153 million and no debt for, to finance that project going forward to be in production by H1 2020. This is a quick video I'm going to show you of what it looks like. So as I was saying, we had the initial east vein and the west vein here, which is the Bonanza Zone, and these are your grades as I discussed. And then and then we did a little research below, a little bit of drilling below, and this is where we were going to cut it off. So in 2015, we sunk those 4 holes, and this is where we hit them, and this is what we found, this new extension below. So we continued to drill more and more and more. And what we found was just more and more mineralization. And what's ultimately what we believe is happening is we're going to have a mine on top, which is going to be the Bonanza Zone, which is going into production, which is fully financed at this point. And then ultimately down below. And we keep finding these veins in echelon, one in front of the other. As you can see here, the Anticipada vein, as well as some other veins in front of that. And as you can see, the silver goes down, but the tonnage is very, very large, and the base metals start coming in and make a very productive and economic and robust project down below as well as above. This just gives you an idea of the infrastructure and the complexity of it and the comprehensiveness of the structure. Then we spin it for you to give you an idea. It's on a 45-degree to 65-degree angle, which is very amenable for mining. This just gives you an ideal perspective of how wide our veins actually are in true thickness. at their fullest. Here we just zoom in, and we're actually going to come down with 3 spirals to access the full extension of the asset to mine it. We spin around here in the back. You can see those 3 coming down, and then the expansion of drilling just continues out this way, and we just see the expansion coming down this way, and this way. So the more we drill, we just can't get away from it. We have a property that you'll see I'm going to talk about a little farther along in the presentation, but this project just keeps growing and growing and growing. We've already been through this slide. So this is the distribution of the silver that I was talking about, and on the other commodities in the asset. So you can see silver along the top, gold kind of throughout, which is kind of unusual, and there's some geological theories based on that. You've got your lead and your zinc, and then you have copper at the bottom, just to give you an idea. What we're starting to see, though, historically, Fresnillo has been looking, and in this area, always east-west vein structures, back and forth this way, like this all the time. What we've started to notice, though, are some surface structures that are starting to line up on a north-south basis, which is new for this area because they've always looked east-west. The reason we see that is if you were to superimpose these 2 images over each other, you can see that there's gold down here and gold down here, and also gold this way. This is where the intersection of the 2 veins are happening, and you're getting an extra thickness of gold at that point, and higher grades of gold too. So this is another geological thesis that we have of adding value to the company by looking at these north-south structures. Here, what we also believe from a geological point of view is we have an intersection of 200 meters of skarn. We also have other elements like a boron, 1% boron over the top of this, and then copper deep in the system. I know that sounds technical. What that means is that we believe we have an upwelling fluid zone for the region. So we believe we have found the origin on our property, on the JV property, for this southeastern part of the property that I showed you before. This is very, very significant because those veins that you saw earlier that were over down in this area on that first slide, that you saw them coming over onto the property, they actually origin on the property and go out, and that's why we have the arrows pointing back. So we believe we'll have extra exploration going forward, and that's what I'm talking about right here. So you have the Valdecanas, which is being mined, and this is where our near targets that we're going to explore and try to exploit over the next year from a drilling and exploration point of view. But these veins, we have arrows going into the property, but actually the upwelling fluid zone is on the property, and that justifies the reason why these veins, we have a very, very high level of confidence that these veins are going to be on our property. Up here, they found silver in 1552, 500 years ago. As you can see, there's a swarming of veins. This is the other upwelling fluid zone for this region, the only one that has been found to date. This is where we believe the second one is right here, because all these, with all the boron, the 200 meters of skarn, and the copper showing in for the first time in a system in this region, we believe that these indicate the fact that we have an upwelling fluid zone. So looking at our property, this is our property, 16 kilometers by 7 kilometers this way. This is how much we've explored so far. You could say, I don't know, 5–6% of the property. And we have a $1.2 billion asset to point at this point. And this is what Fresnillo's been drilling. They have all these veins over here and these structures. So this is what Fresnillo's told us, that these veins actually come over onto the property. And this is what we're going to be exploring over the ensuing years. This next year, we're going to be exploring up here in these areas, these north-south structures, and closer and deeper underneath the Valdecanas vein. Here, we are going to, beyond that, we're going to explore these areas because these veins literally come across this way, and that will add more significant value to the property. So as I was saying, MAG at this point is basically what I told you at the beginning of the presentation, but really where we're going to add value and move the needle for our shareholders in the future is here at the future exploration. So in summary, basically we have the development going forward, We have the evolution of the asset, and of course exploration. We have the deep zone, the northwest structures, the northeast structures, and a 20,000 meter drilling program. So in summation, we have very extensive coverage for anyone who wants to look at that. We have a very, very good shareholder base. We have BlackRock as our largest shareholder. We have all the key dedicated gold and silver funds out there, and 87% of them are institutional. We have a very strong board of directors. A lot of people are former CEOs of very successful companies, Silver Wheaton, Redback, KGHM, and of course Mag Silver as well. And we have a strong management team. And with that, I'll end the presentation, and if anyone has any questions, we have a booth here, and I can go into things in much more detail. Thank you.
Thank you, Michael.